Last Wednesday, Marc Faber told us if stocks didn't start to rally, the market could break the November lows, triggering a new wave of selling. Marc Faber is back with us, this time on the phone from Thailand. As you know, he is the editor and publisher of the Gloom, Boom, and Doom report. Marc, always glad to talk to you. What do you think about this idea of the U.S. government taking a step in the direction of nationalization with certain banks? Is that going to give the stock market the boost it needs?
Well, I'm not sure that it's all that relevant, and I would say it's probably the only solution that the government can actually implement. Either these banks are bust, or they get a capital infusion, and the private sector probably doesn't want to give capital to the banks at the present time. So if the government steps in, that's at least a solution. I'm not sure it's a good solution, but it's a solution.
So you think it would sort of quell concerns about capital adequacy for the likes of, I'm just throwing the names out, Citigroup and Bank of America?
Yes, I think that would certainly improve the credit ratings of these institutions, because then they become kind of the responsibility of the government.
And the form... Go ahead, Marc, sorry.
But I'd like to just point out concerning the market, people focus on indices, and I'm sure that indices are important. But let's say if you look at the market since last November, the low was on November 21st. And some indices have made new lows, like the transportation index and the Dow Jones. But the S&P hasn't made a new low, and the Nasdaq 100, that doesn't have essentially financial stocks in it, is still 10% above the November lows. So I wouldn't give up entirely on the theory that we can still have some kind of a rally developing relatively soon, for the simple reason the news on the economy has been horrific.
Marc, what we would like to ask you to do is just hold that thought, and we'll pick up with you, if you don't mind, right on the other side of this break. We're back in 2. As promised, we're back now with more from Marc Faber. He's joining us on the phone from Thailand, the editor and publisher of Gloom, Boom, and Doom. Marc, before the break, you were giving us some key levels to watch as far as the next potential rally takeoff. What were they?
Well, the point is the economic news is a disaster, and the economic news will stay bad for quite some time, and the global economy will continue to deteriorate. The question is, however, to what extent have asset markets discounted much of the bad news? Say you take the CRB. The CRB now is around 205. At the low points in 99 and 2001, it was at 182. That was the low. So we're 10% above the lows in 99. But the 99 lows came after a 20-year bear market. And in real terms, the CRB now is at an all-time low. So I think that in some asset markets, we have discounted already horrific news. And as the news over the next 3 months may still be bad, but not quite as bad as in the last 3 months, because we fell off a cliff in the global economy. And there can be some rebound, say, even in housing starts, or in exports and so forth. They will still be negative, but there can be a rebound. So the bulls will then say, look, the economy has bottomed out, and we could get quite a rally. In addition to that, I can assure you, globally, the central banks will print money. And if it doesn't work, they'll print more. And so I think that purely from a liquidity point of view, and from the zero interest rate policy point of view, and also sentiment is now extremely bearish. It is at the worst level than at the lows in 2002 and 2003. We're back to sentiment levels like in 94 or in 1990, when the markets made relatively important lows. I'm not saying that sentiment figures can't stay bearish for longer, but right now we are more or less in an area where the market, possibly after a final sell-off, could have a reasonably good rally.
Mark, I've got to jump in here and try to pin you down on this subject, because last week when we talked to you, you said if the market did not rally on Thursday, then it could test November lows. We've had 2 days, Thursday and Friday, where the S&P 500 went down more than 1% each day. Yet today, you're still saying we may see a rally. I can't quite figure out where we stand there.
Well, first of all, that is correct. I said at that time that the market should begin to rally, but I didn't say precisely on which day. And two, I'm still somewhat encouraged that major indices haven't broken down below the November lows. And I think what may happen is that some indices may still break below the November lows and trigger kind of the final sell-off, a selling panic, a selling climax, and then you get a spirited rally. But I'm only mentioning this because I think that people have turned extremely bearish, because I get a very large email traffic, and I see a bit the comments from my readers, and a lot of them, they want to short the market here. Okay. This is something I would not necessarily do at this stage.
All right, Mark, we always appreciate getting your thoughts. Thank you. Marc Faber, editor and publisher of the Boom, Gloom, and Doom Report.